Hello, prospective homeowners. Will you take the risk of purchasing your first house? Purchasing a home is one of the most thrilling and frequently daunting experiences of your life, regardless of whether you're sick of renting, want to make an investment in your future, or simply want a place to call home. Please hit subscribe button for more informative videos. Step 1. Assess your financial situation. Examining your finances thoroughly is essential before you even begin looking at properties. Having adequate money for a down payment is only one aspect of purchasing a home. There are many other expenses as well. Can I afford to buy a home? Is the question you should be asking yourself at this point. Since your credit score will have a significant impact on the kind of mortgage you are eligible for, start by assessing it. In general, your chances of being granted a loan with a favorable interest rate increase with your credit score. For the best rates, you want your credit score to be above 700, but most lenders demand it to be at least 620. After that, examine your savings. One of the largest expenses related to purchasing a home is the down payment. Although some financing programs, particularly those for first-time buyers, allow for smaller down payments as low as 3.5% for FHA loans, you will often need to put down 20% of the home's purchase price. Closing expenses might vary from 2% to 5% of the buying price of the home, so you'll also need to factor it into your budget. Your debt-to-income ratio, DTI, or the portion of your income that is used to pay off debts each month, must also be considered. This ratio is used by lenders to determine how much you can afford to borrow. Most lenders prefer a DTI of 36% or less, though some may go higher depending on the loan type. Lastly, consider the monthly mortgage payment and how it fits within your budget. This includes not only the principal and interest, but also property taxes, homeowners insurance, and possibly private mortgage insurance, PMI, if you put down less than 20%. Step 2. Determine what you can afford. After assessing your financial situation, the next step is to determine how much home you can buy. Generally speaking, you want a home that costs no more than 2.5 to 3 times your annual salary. For example, if you earn $70,000 a year, you might be able to purchase a property that costs between $175,000 and $210,000. Naturally, this depends on your unique situation, including your down payment and monthly expenses. For figuring out your possible monthly payments depending on different loan kinds and home values, a mortgage calculator is a helpful tool. Location is another crucial factor. Your budget might not go as far as it would in a smaller city or rural area if you're trying to purchase in a pricey market like New York City or San Francisco. Remember that the cost of a home varies significantly depending on where you live, so you should compare what you want in a particular neighborhood with what is reasonably priced. Step 3. Get pre-approved for a mortgage. Now that you know how much you can afford, it's time to get pre-approved for a mortgage. This is one of the most important steps in the home buying process because it shows sellers that you're a serious buyer. A pre-approval letter tells the seller that you've already been vetted by a lender and are in a position to make an offer. To get pre-approved, you'll need to provide your lender with several documents, including your income verification, tax returns, bank statements, and details about your debts and assets. The lender will then run a credit check and assess your financial situation to determine how much they're willing to lend you. There's a key difference between pre-qualification and pre-approval. Pre-qualification is a more general estimate of how much you might be able to borrow, whereas pre-approval is a more thorough process where the lender commits to a specific loan amount. Always aim for pre-approval, as it gives you a stronger position when bidding on a home. Step 4. Start house hunting. Now comes the fun part: house hunting. With your pre-approval letter in hand, you can begin looking at homes within your price range. Start by creating a list of must-haves and nice-to-haves. Must-haves might include things like a certain number of bedrooms, a garage, or proximity to work or school. Nice-to-haves could include a pool, a finished basement, or a large backyard. It's also important to consider the neighborhood. Research the area's schools, safety, amenities, and proximity to work or public transportation. Check out local parks, grocery stores, and other conveniences that may impact your daily life. Once you start visiting homes, don't rush the process. Make sure to take your time, and don't be afraid to walk away if something doesn't feel right. Don't forget to take plenty of photos and notes so you can keep track of the properties you've seen. If possible, bring along a trusted friend or family member for a second opinion. Step 5. Make an offer. When you find the home of your dreams, it's time to make an offer. This is where your real estate agent will come in handy. They can help you navigate the offer process and determine a fair price for the home. Your offer will typically include the price you're willing to pay, your contingencies, and the closing timeline. Common contingencies include things like the home inspection and financing. If the home inspection reveals major issues, you can use this as leverage to negotiate a lower price or ask the seller to make repairs. Similarly, if your financing falls through, you want to make sure that your offer is contingent on getting a loan. Once you make an offer, the seller can either accept, reject, or counter your offer. If they counter, you may need to go back and forth until you both reach an agreement. Step 6. Home inspection and appraisal. After your offer is accepted, it's time to get a home inspection. This is an essential step to make sure the home doesn't have any hidden issues, such as plumbing or electrical problems, structural damage, or mold. A qualified home inspector will evaluate the home's condition and provide a report of their findings. If major issues are discovered, you can negotiate with the seller to either have them repaired or lower the price to cover the cost of repairs. In addition to the home inspection, the lender will typically require a home appraisal to ensure that the property is worth the price you're paying. If the appraisal comes in lower than the agreed-upon price, you may need to renegotiate with the seller or come up with the difference in cash. Step 7. Closing the deal. The last phase of the home buying process, completing the contract, comes after the appraisal and home inspection. This phase, which entails a number of crucial actions, represents the conclusion of your work. Closing usually occurs in a mutually agreed-upon site, an attorney's office, or a title firm. You will sign a number of legal documents during this meeting, such as the title transfer, final loan agreement, and other required forms. Before signing, it is crucial to carefully read each agreement and ask any questions if something is unclear. At this stage, you'll also need to bring the required funds for your down payment and closing costs, which are typically outlined in your loan estimate and closing disclosure. These costs usually include title fees, attorney fees, inspection fees, homeowners insurance premiums, and any prepaid property taxes. Be prepared for this significant financial outlay and ensure your funds are ready in advance to avoid delays. You now have a comprehensive guide on purchasing your first house. As you can see, the procedure may initially appear a little overwhelming, but it is completely achievable with the correct information and a well-thought-out plan. The most crucial things to remember are to engage with experts who can help you at every stage, stay organized, and make a careful budget. I hope this advice has given you more confidence and preparedness as you prepare to start the exciting path of homeownership. Do you have any queries or advice based on your personal experience purchasing a home? I'd love to hear your thoughts, so please leave them in the comments section below. And don't forget to hit that like button if you found this video helpful, and subscribe for more tips on navigating homeownership, finances, and everything in between. Thanks for watching, and best of luck on your home buying journey. I'll see you in the next video.